Hello students, today we are going to see the fundamentals of accounting. That means the basics of accounting, and we'll be seeing the definition of accounting and the functions and all. Okay, so let us go into that. What is accounting? So we have already discussed that accounting is the language of business. So it is the language by which the business communicates to the outside world. Okay, so what is happening inside the business that is being communicated through accounting. Okay, so accounting is the language of the business. And in accounting, what we do is we record the transactions. So there will be numerous transactions happening in the business, and that will be recorded. And you have to summarize that, and you need to know what is the end result of all these transactions, and that will be communicated to the stakeholders, the various stakeholders. Stakeholders means those who are interested in the business, like consumers, the investors, government, the community at large. So all these are the stakeholders of business. Okay, and like any other language, that is, accounting has its own terms and rules. Like it has got its own terminology. Like in the coming sessions, we'll be seeing the basic terms used in accounting and the rules for accounting, how you do accounting. Like any other language, it has got its own terms and rules. Now, definition of accounting. I think you can learn this either of these definitions, like the one given by the AICPA, that is the American Institute of Certified Public Accountants. Okay, it's accountants. Okay, public accountants. Accounting is the art of identifying, recording, classifying, and summarizing in a significant manner in terms of money, transactions, and events which are in part at least of a financial character, and interpreting the results thereof. So, accounting actually is an art. That is, you may be knowing the difference between art and science. Science, in the case of science, it has got hard and fast rules, and the cause-effect relationship is there. And so it is a more systematic body of knowledge in the case of science. But in the case of art, you see, more than the theory, the practice is more important there. That is your own creativity, how you add on your own personalized skills, personal skills and all. So such things are important in the case of an art. So accounting is not just a science, but it's an art also. How you do it, your own way, you will be maintaining the accounts and all. But within the limits of the rules of accounting only. You cannot violate that rules and do it in your own way. That you cannot do, but still it's an art. All of us should be good artists. Like you may be a professional, but how you do that is different. No, that how you do that will be different from how another individual does. Okay, so that's always different. In the case of a doctor, teachers and all, you see that each one doing their profession, practicing their profession will be different. So that is their own way of doing it. So in that, to the body of knowledge, they add their own personal skills, the personality, traits will come into play, your character, everything. As a person, who you are, how you can interact with others, all such things will come into play while you are becoming an artist. So every professional should be an artist also, because he or she has to do with some creativity, her own or his own way of doing things. So that is why accounting is an art. So it's an art of identifying. First of all, you have to identify. So these are the key terms that you will see throughout this course. That is, you'll be seeing the functions, like you have to identify which all transactions can be written in accounting. That is, which all transactions will get into accounting. Like some qualitative transactions, which the transactions which can't be put into numbers, that can't be recorded in accounting. Okay, so identifying is an important part. Identifying which all transactions will get into accounting is important. Recording is important. So after identifying which all transactions you are going to record, then it has to be recorded. Okay, all business transactions should be recorded. So I'll tell you later, I'll tell you in which all books of accounts it will get into. So you have to record it somewhere, otherwise you will forget. What is the need for recording? Like recording means you are putting that into writing or print. You are storing it somewhere, that's all. So whenever that is during classes and all, you make lecture notes and all. Why you're doing that? Because you shouldn't forget that, no? That is why, in order to facilitate memory, you are doing that. So recording is important, and classifying. Often classification will ease your work, no? So classifying is important in a sense, like suppose if we have recorded a lot of transactions, if that are classified and recorded, then it becomes easier. Because like the way you write notes, like subject wise notes you will write, no? And I suppose that you are doing that, yeah. That is really easy for you to go back and read again. So classified work is always easier. So we make classify, like all sales together, all purchases together, all assets together. So it becomes easy to consolidate and interpret results. And summarizing, that like you have to find out the financial performance that at the end of a particular period, whether it be a week, a month, a fortnight, or a quarter, or a year, you have to find out what is the end result of this. So you have to summarize it. So how we are doing that? That will be in a significant manner. That is, in a specified manner, you will be doing that. In accounting, you have specific ways of doing that. So in that you do, and in terms of money, that is all transactions events which can be expressed in terms of money only will be recorded. Okay. Otherwise, if it's a qualitative thing, you cannot record it, I told you. And these transactions should be in part, at least in part, of a financial character. That is, at least partly it should be of financial character. It should have, otherwise I told you, some qualitative information can't be recorded in accounting. Okay, so such things you cannot do. But so the point that I'm going to drive home is like the all transactions which are at least in part of financial character. That is, fully it need not be in it need not be of financial character, but at least partly. Then you can include that in accounting and interpreting the results thereof. So after every after every performance, you will evaluate it, no? Evaluate it. So you have to interpret how things went on. So that is it. So interpreting the results thereof. And another definition given by the American Accounting Association, that accounting is the process of identifying, measuring, and communicating economic information to permit informed judgments and decisions by users of the information. Like the same thing, but in a different form they have put it. That is, it's a process of again identifying, measuring, and communicating what economic information. So in the previous definition, it was like transactions and events which are in part of at least of a financial character. It's the same thing, that is economic information to permit informed judgments. That is, you are interpreting, and that is facilitating the users of the information to take meaningful decisions. So all this information can be used for making good decisions. And now, who are the users of accounting information? I told you there are different stakeholders like owners and potential investors. What they need to know? They need to know about the risk and return of investment. How far their investments are safe, what rate of return they'll get and all. And for employees, it is whether their job is secured, whether they'll get all their benefits like salary and other fringe benefits and all, whether they'll get that. Okay, so that is it. That is what employees want to know. And creditors and financial institutions are people who have advanced loans to these businesses. Okay, so the credit worthiness of the business, that is the credit worthiness of the business they need to know, and they have to ensure whether they'll get back their money, whether their loans advanced by them will be properly serviced by these people. Okay, and since the customers, they need to know the profitability of the business, and they need to know the cost, the profit margins and all, because they indirectly they are checking whether they are exploited or not. Okay, so if the profit margin is more, that means this company is selling the things at a far higher price than its cost. So that's a sort of exploitation. So they need to know that. Then government and other regulators, like that is with tax compliance and all, how these companies are managing resources, whether they are contributing to the national income, and whether they are complying, that is tax regulations. Lot of regulations will be there, no? Whether these businesses are complying with that, whether they are paying the correct taxes and all. Competitors, that is often you see that the profitable business will be imitated by others. So a lot of competitors will come into play. So competitors or people with funds are eagerly looking at businesses to see whether that can be copied by them. Okay, so competitors. Financial analysts and portfolio managers. Like financial analysts means who analyze the performance of different companies, and portfolio managers are those people who help with the investment. Because to most of us, investment is that is a very difficult area which calls for a lot of research and all. So these people will do it for you, and you can entrust your money with them. Like examples are mutual funds and all. So you can entrust the money with them and they'll manage your fund. So they need to know about the companies. No, for that they'll be checking the financial information or these financial statements. Researchers and academia. That is the academia is interested in the financial performance and position, and they'll be studying the information about the companies as part of their academic work. Okay, so all these are this is how different users of accounting information uses accounting. Okay, so this is really important. Okay, and thank you and have a good day.